biggest lie you're told in trading is that losing is just part of the game, that you should just stick to your strategy, take the losses, and trust the process blindly. And I mean, sure, you can have a one-to-one risk-reward strategy with a 51% win rate. And theoretically, if you follow it to the letter, you'll be profitable. But let's be real, this doesn't work in practice. It all falls apart. What's more likely to happen with all these strategies is that you'll rack up both wins and losses, and you'll be taken on a roller coaster ride, only to end back where you started, at best. The truth is, if you want to go from break-even to ridiculously profitable, you can't afford to just trust the math and hope it works out. You need to filter them out, ruthlessly, because not all setups are equal, and treating them like they are is exactly why most traders stay stuck in break-even hell. Once you trade A-plus setups only, you'll see how simple and lucrative trading can actually be. You'll probably be confused at your extremely high win rate and risk-reward, numbers that you thought were impossible to hit before. So in this video, I'm going to show you exactly how to find A-plus setups easily so that you can finally watch your P&L get out of the mud and go parabolic. Most traders are told to take every trade their strategy gives them, win or lose. But that's the biggest trap. There is no strategy that exists on its own that will just casually make you a ton of money. Or everyone would be using it. There isn't much of a difference between an unprofitable or break-even trader and an extremely profitable trader. They could be using the exact same strategy, looking at the exact same chart, and have the exact same level of experience, but one will be making way more than the other. And the only real difference is that the profitable trader filters for A-plus setups. That's it. That's the only reason some traders make a lot and some traders make nothing or lose money. You don't need to do anything special, you just need to be more selective in how you trade. If you just avoided a couple of low probability setups and identified a few more A-plus setups, your P&L would already be through the roof. And finding A-plus setups is actually a very simple process. It doesn't take more than a few seconds if you do it properly, and it's less hard and more profitable than trying to follow your strategy to the T. Let's break it down. Not every A-plus setup is the same, but every A-plus setup has the same 4 factors that always line up. Once all 4 of these align, there's a very high likelihood that your trade will turn out green. The first factor, and the foundation of them all, is the level. So here's the thing. When you open up a blank chart, you're met with a bunch of candlesticks and random price movement. And unless you're some sort of gifted expert, these candlesticks are very difficult to read. You can't really predict what's next with any kind of reliable accuracy. That's why we come up with strategies and systems in the first place, right? So we mark clear supply and demand levels on our chart. These are zones where price violently reversed in the past, meaning there was heavy buying or selling interest stacked there. When price comes back to those zones, the same players often step in again, creating high probability turning points. That's why every A-plus setup starts with identifying the right level. This already massively increases our odds. From a blank chart where you're not sure what you're looking at, to now having clear entry and exit points. You can pretty much enter at a level with a one-to-one risk-reward, pick a random direction, and do this over and over again, and you'll get roughly half of them right. That puts us at break-even. So just with this structure, we're already in a way better position. We're not prone to trading in random places or over-trading. Our baseline is break-even, which is great. From here, all we need to do is use the other 3 factors to decide if the setup is A+. Once they're aligned and we only take those types of trades, we'll increase both our win rate and risk-reward dramatically until we eventually become extremely profitable. That's all it takes. This is the first step in identifying an A+ setup. The price must be at a supply and demand level, and we're looking for a level-to-level move. So our job as traders isn't to guess every tick or candle. It's simply to figure out the direction, which level is more likely to be reached next. And that's where the other 3 factors come in. After identifying the correct supply and demand levels, and waiting until price enters a level, the second factor is trend. The trend is the most powerful force in the market. Most traders completely ignore the bigger picture. They'll see the price at a level and think, okay, I'll buy here or sell there, without even checking what side of the market is actually in control. Think about it. The market is always moving toward the path of least resistance. If we're in an uptrend, buyers are in control. Every dip is more likely to get bought up. If we're in a downtrend, sellers are in control. Every rally is more likely to get sold off. So if you're trying to trade against that, you're stacking the odds against yourself. You might win one here and there, but long term, you'll bleed out. Instead, what we want to do is use the EMA cloud. Now, this gives you a pretty much instant read of the current trend. If it's sloping up, we're in an uptrend, and if it's sloping down, we're in a downtrend. It's important that the cloud is actually sloping in one direction or another. If the cloud looks choppy or flat, it means neither side is in control. And if neither side is in control, we can't have an A+ setup because we can't stack probability on one side. So for the setup to be A+, we want to see the EMA cloud sloping up or down. This is on the 5-minute, which is our main execution time frame, but it's also good to zoom out to a higher time frame like the 15-minute, the 30-minute, or the 1 hour to see if the higher time frame cloud is also trending. If the higher time frame cloud is trending as well, like we see here, then it's a very good sign that the market will indeed keep moving in that direction. All trending forces point one way. Actually, I go more into detail about cloud alignment in another video, which I'll link here so you watch later. So for an A+ setup, that's what we want to see. We want strong trending conditions because it stacks probability to one side. It makes a winning trade way more likely. Now, trading from level to level when the trend is aligned is already enough to give you an edge, and a strong one. You'll absolutely nail high-quality setups over and over. But we can stack the odds even more in our favor and filter for even better setups with the next two factors. After trend, the third factor is market structure. This is where a lot of traders miss the point. They'll look at candlesticks one by one, trying to read every little wick and body. But all of that is noise. What you actually want to pay attention to is the sequence of highs and lows, because that tells you which side of the market is holding firm and which side is giving way. Ask yourself, which side looks softer? Which side is easier to break? The market is like water. It's always going to flow where there's less resistance. So if buyers are stepping in and defending every dip, while the highs are getting broken over and over, that's strong bullish structure. The path of least resistance is up. This is why structure matters so much. It's not about predicting the exact next candle. It's about identifying which side is already winning the battle. Because once you see which side is weaker, which side is softer, you don't need to guess. You already know which way the price wants to go. And when you combine that with your level in the trend, you're stacking some serious probability in your favor. So now we've got our level, we've got the trend on our side, and we've confirmed it with structure. That alone will put you deep in the green. But now comes the final factor for finding A+ setups, momentum. When it comes to momentum, what you really want to watch is the speed and strength of price movement. Don't just stare at candles in isolation. Pay attention to how price is moving. Is it grinding slowly, or is it moving with intent? Are pullbacks shallow and controlled, or are they sharp and messy? One of the easiest ways to see this is by watching how price interacts with the EMA cloud. If price keeps tagging the cloud and bouncing back in line with the trend, that's a great sign. It doesn't need to be some explosive move every time. What matters is consistency. Price respecting the cloud again and again shows you that momentum is following the trend and less likely to reverse out of nowhere. That's what we want to see before pulling the trigger. So now let's pull it all together. Price comes into a demand level. That's our foundation. The EMA cloud is sloping up, telling us the trend is bullish. Market structure is clean. Higher highs, higher lows, no cracks on the buy side. And on top of that, momentum is kicking in. Price keeps bouncing off the cloud and driving higher. And when you've got all four factors aligned like that, the odds are stacked so far in your favor it almost feels unfair. You're trading with the full force of the market behind you. This is where trading stops being impossibly difficult and stressful, and starts being systematic and ridiculously profitable. Imagine if you only took trades like this and ignored everything else. It would turn so simple and lucrative. And now you have an objective, repeatable way to do it. By the way, if you want to take this even further, I'll work with you directly inside my one-on-one program. 8 weeks of step-by-step training where we work to make sure you can spot and execute A+ setups consistently. The link to apply is in the description. If you found this valuable, make sure to like and hit subscribe, and I'll drop more videos like this. See you in the next one.